This is the weekly economic and market report for the week ending August 12th, and I look forward to August 15th and break it down into the first section, which is sentiment, my personal sentiment, as well as investor sentiment. I also, in the second section, I talk about economic and market factors. And this week, my commentary is going to be about those factors and kind of what I don't have a crystal ball, but here's what I expect to happen looking forward. So that will be my commentary. So let's start with my personal sentiment. And I eliminated the micro sentiment because, first of all, I don't invest that way or trade that way, not typically. People ask me if I'm a day trader. Well, I have day traded before just because something skyrocketed up and I got out, but it's not something I sit and look at the screen at every day. And I'm not really a swing trader either, although I have done swing trades, which are usually looking out, a few days to maybe up to 4 weeks. But sometimes the profit presents itself and you take it. So my sentiment, my personal sentiment is that I am 70%. Well, maybe I should mention I was horrible at micro. Anyway, market's gone nothing but up ever since I've kind of gotten bearish in the short term, thinking there would be a pullback, and it hadn't happened. So anyway, short term, I am looking for a 70% bullish, 30% bearish, 0% neutral, and I'm 70% bullish based on just the conditions. This thing is going to roll out at some point where I think we're going to get a go back maybe 10%. And then I think we'll continue on up for a variety of reasons, but which hopefully I'll get into a little bit as I go through this, some of these economic and market factors. Midterm, at some point this thing's going to roll over. I expect it to come down a little bit, go back up, beyond the highs that we had previously, and then a huge collapse in that time frame. Now, I get some of this from Peter Schiff. I get some of it from David Hunter. I get some of it from my own personal analysis based off of the amount of debt that the U.S. has accumulated, the amount of leverage in the system. And I kind of cobbled together from reading, watching different financial quote unquote experts and economists, and say this is kind of where I land looking forward. So I do still believe that in the middle of next year we'll be in a horrible recession, or worse, a depression. And so that's why my long-term sentiment is 100% bearish at this point, and I think it'll get extremely, extremely ugly, especially with the spending that's going on. It's just making things worse. That the federal government keeps finding ways to spend money, and now we're going to do the burnt toast thing, where instead of trying to fix the tax code and make it easier for people to understand, we're going to try and catch people that are quote unquote cheating. So that's my sentiment, and the investor sentiment right now continues to go up. Now, when I look at this, I kind of like it when people are more bearish than bullish, because as a contrarian type of investor, I am doing pretty much the opposite of what other people are doing. And, right now we continue a climb up and bullish, and I actually expect the bullish sentiment of this to just skyrocket when we go through. And they're going to be, I think David Hunter probably put it best, there are going to be people that will be convincing all of us that this bull market will never end. It's the greatest thing ever, and then there's going to be a huge collapse. And I don't know. I think David Hunter believes, I need to do a video on him. Believes that this is going to happen. It'll happen pretty quick when the when the market starts to turn the other way. And I don't know. I mean, we'll have to wait and see. I hope it doesn't happen. I would love a forever bull market. It's just not realistic. And we've manipulated this market for long enough with quantitative easing games and low interest rates and things of that sort. So at some point, you got to pay the piper, and the piper wants to be paid here pretty soon, I think. So as I look at this, so I'm watching to see if the bullish sentiment continues to rise. At some point, if you look at this dial over here, it will move as people get more bullish to more fearful, and especially for a contrarian. It says sentiment survey is a contrarian indicator. My expectation is this thing will probably be pretty close, far to the right here in the red, and that's when I'll start to change how I'm investing. Probably quite a bit cash, probably playing some. I don't do short positions in the traditional sense. I do it more through options, but I'll begin to do more as the market goes up. I'll start playing more shorts for the market go down longer term. And, there'll be like the back spreads that I have a video on, a bearish type of back spread, and probably some straddles, trying to play out the rest of the height of the market. And what happens here, especially where straddles become play more of a part, which is one of the reasons I did a video on it, is as things go up, the premiums for options go down, and so the straddle's not as wide, and so by virtue of it not being as wide, it doesn't take as much to start seeing a profit associated with it. So as things start to top out, I'll start to make those types of plays in the market. And, I'll also be doing, like I said, a lot of cash, and just sitting till, things clear in the marketplace. So that's my sentiment. That's kind of what my plan is. And then, when the thing bottoms out, maybe it'll only be 40% or 50% like most people are calling. My expectation is still be somewhere in the, 80 to 90%. I mean, that's a very negative thing, but I hope it doesn't happen, but I think it will. And, I have Peter Schiff thinks that. Brent Johnson, Milkshake Theory guy that I've talked about. David Hunter is in that camp. So there's quite a few that have been in that camp, and I've been in that camp for a while, thinking that, the amount of U.S. debt has to catch up with us at some point, and I think they're running out of space. You paint yourself into a corner only so far, and I think they're already up on their tippy toes, waiting to fall over. Okay, so some of the market indicators that I talk about here is the 10-year Treasury Yield. If we look at, that's for one day. Let's look at 5 days. We'll look at this week. It's about where it started the week. And I think that's just taking a rest. If we look at, let's say, the last 3 months, you can see that it's trending down, and that's a good thing. And I believe that this will, looking through a crystal ball, David Hunter, I think, expects that to go down 2%, possibly a little bit lower. I I tend to agree with that. Um, as the Fed will back off and strange things will begin to happen. And the pivot, I don't know when it will come. They're talking a tough game, but like I said, with the elections coming up, I believe that they'll have to back off, at least suspend raising the federal funds rate, prior to November. But they may not. Maybe it'll go up 0.25% or 0.5%. They've promised. I'm hearing the Fed folks talk in terms of 0.25% or 0.5% in September. Mortgage rates have kind of come down, but you can see where they were. Around 3% or 2.86%. They topped out here around 5.78% and popped up just a little bit from a little under 5% to 5.22%. But obviously that if the 10-year yield starts to go down, then we'll see the mortgage rates go down also during that time period. And please do not do a 1-year ARM. You could be, after a year, this is how people got in trouble during the great financial crisis. But I do expect that these rates to slowly but surely go down. And then, David Hunter has actually thought that his forecast is that rates may be near 0%, because we'll be in such dire straits by this time next year, and then you'll be able to get a loan for 1% or so. But we'll see how that plays. But nobody will be able to afford it because nobody will have jobs. DXY, I've been tracking this because of the Milkshake Theory. It's cooled off a bit. It peaked out at about a little over $109. It stands today. It was up a little bit today, but at $105.63. My expectation is and remains that this will continue to go down, and that will just exacerbate the inflation because things will then cost us more with a strong dollar. That keeps things from being too expensive, even though we're experiencing unbelievable inflation. Just imagine it much worse, say 20 to 30% worse. So that in essence the forecast. But if you go with the Milkshake Theory and this thing does go up, it's ugly either way, folks. I mean, if this thing starts going up to 112, like Brent Johnson has talked about, maybe even to 120, that will create a collapse too. That'll create the global collapse. So there's a lot of black swan events that can ultimately cause this thing to roll over. Brent Johnson has a view, Peter Schiff has a view, David Hunter has a view, all in my mind kind of contrarians out there with different theories associated with it. And what I'm trying to report here are on those different theories. And the reason, if it goes up to 112, if you haven't watched the video on the Milkshake Theory, please do. Gets up to 112, 120, the dollar strength will make the U.S. where everybody wants to put their money. And that's going to then make other economies collapse. That's the short version of the Milkshake Theory. So that's kind of where things stand. The fact that it's backed off makes me hopeful that maybe it'll continue on the decline. But then it can go too far, as I mentioned. And then you got another problem. The initial jobless claims, I talked about this last week. You can see it's starting to, when we had the big jobs report of 528,000, now that week they reported 248,000 jobless claims. Now it's 262. I expect this number to continue to go up. Nothing goes up in a straight line. The market, economic data. So you can expect, but my expectation is this thing will continue to rise as time goes by. And then if we look at the Bureau of Labor statistics, the number, obviously the big one that was this week was the CPI. You can see, oh boy, look, we peaked out at 9.1%. And just like anything else, my expectation is this thing will start to go back up, but maybe but also my expectation in the short term, this thing will continue down as some of the energy prices, because of the slowing economy, will cause some of the prices to back off their rates. But 8.5% that our president was bragging about is nothing to brag about. And this thing may go all the way down to 7 or 6% and start trending down that way. And then everybody's going to get excited. That's when the stock market's going to go up. My expectation is, and the Fed says, "Oh, see, we've defeated inflation," and then all hell's going to break loose because they've tightened into a recession. Like I've mentioned, this is not all Powell's fault. In my mind, it's a series of missteps from before the Great Financial Crisis, but certainly during the Great Financial Crisis, and the easing of quantitative easing, and the interest rates being artificially low, and all these people that are Bitcoining it and speculating in the market are going to be in for a rude awakening. And at the peak of when things are going well, the floor is going to come out from under them. And I think it was George Gammon, who I'm going to mention here in a minute too, another YouTube channel person I watch regularly. It was said it's kind of like Wile E. Coyote, going out over, running off a cliff, and then all of a sudden realizing that there's nothing but the bottom of the canyon below him. So that's kind of what I expect. But just kind of taking a look at some of these things. I mean, look at energy. These are year over year numbers. For 12 months, energy was up 41.6%. Well, now it's only up 32.9%. Not anything really to cheer about. But again, energy prices, my expectation in the short term is they will continue to go down, as you saw back here during the Great Financial Crisis, or what I call the GFC, or what's been called the GFC. Similar to this, and we'll start to see it go down, and possibly very quickly. And then I think the Fed will realize that they went too far. As I mentioned, George Gammon, he found this site. It's called Visualizing Major Layoffs at U.S. Corporations. So this is since, in essence, February. Peloton, Carvana, Ford, and as George mentioned, Amazon, 99,000 employees at Amazon. That they've laid off as of July 28th. So who knows what the number might be today. So our economy is not strong. Despite the strong jobs report, there's other problems with the 528,000. But just watch some of these leading indicators. Layoffs is certainly a lagging one, because, even though these numbers are scary bad, as far as the layoffs go, but it takes a while to lay off people. To plan it, HR has to execute it. Have to fill out paperwork for the government. I mean, it just goes there. There's a lot of things that happen, but hopefully you can start to see this pendulum that I'm talking about in some of the previous videos. That we're in this time period where inflation is high, and things are really slowing down more quickly than some of the data that we're looking at would realize, because they're all lagging indicators, at least that the Fed are using. And I think, again, when we hit the bottom, when the pendulum hits the bottom, that's going to kind of be the sweet spot where the market's going to go up, the Fed's going to back off, have some probably victory lap over inflation, and then the pendulum's going to start to go the other way on as far as the deflationary bust. And again, there very few people are calling for this. This is just, putting together from Peter Schiff, from Brent Johnson, from David Hunter, and kind of coming up with what my expectation is of things that are going to happen. And so I don't really have very good news in the long term, but enjoy this last run up if it happens the way that I think. I think, again, I still expect sometime, I don't know, short term, but markets are like an ocean wave. And one of the original people that came up with ways of looking at the market kind of called it, if you go to the beach and you see the waves come in, oh, there's the high point, and then it goes back out, and then you get some type of back off, and then the wave comes in again. So, that's the way markets move, is kind of in this up and down fashion, and it's very difficult to predict what's going to happen next. And if I could, I would not be doing this YouTube video, because I would have almost all the answers associated with it. But it is certainly a wave, in and out, up and down, in the way that the market moves, and even the economy to some extent, if you would let it. And this is where I think we create the problems, as when I work with organizations, they try to control people and things, where you get to the point of over control, and then you start tamper. You can watch that video, how the Fed is tampering with the economy, and they over tamper, they over control, and then things screw up. And yeah, I'm an advocate as an Austrian economist. I'm not actually an economist, but following the Austrian school on economies, believe that things are best left alone. Let them kind of work themselves out, because then you get this over control. And when you get over control, as I know from working with organizations, you tend to turn the wrong control knob, and then things get worse, and a lot worse than if you would have left it alone. And so, but it's against human nature to not try and fix something, and sometimes the best thing is just leaving things alone. So anyway, that's what I wanted to cover this week, and I hope it maybe give you some sense of why I put this together and what I'm looking to. And really, I was going to do it after the start this YouTube channel, after the bus, but I just wanted to kind of get used to putting these videos together. It's a different subject than my Effective Executive YouTube channel. So that's it for this week, and remember, there is always a better way.